Officials had confidence that rising yields was a sign of confidence in the economy, but declining yields is a shrug of the shoulder. I have no idea why we're down here. Q1 compared to where we are right now, it's a bit different, isn't it? When yields are higher, this Fed had confidence that that was validation of a better outlook. And now yields are lower, what? It's just technicals, it means nothing?
Bill Dudley yesterday saying that he thinks yields should be higher, and the reason why they are what they are is because of the Fed basically printing money and going out and buying as many bonds as they have. And they have not come out and talked about their responsibility in where the yield is.
Yeah, and I imagine they might not either. Does policy down in D.C. change anything? Terry Haynes joins us now, Pangea Policy founder. Terry, it's great to catch up. Lisa forwarded on your note. I should have read it. I've read it now. 80%, 85% chance that we get infrastructure in October. Just walk me through the timeline for you and which bill is which.
Good morning, all. There are the reason why it's October is that there are, for final action, is there are four things going on that'll all sort of collide. And it's the end of the fiscal year, the end of September, which is why I pick October. You have two things that absolutely have to happen. The federal government has to be funded, and we have to deal with the debt limit or debt ceiling, which needs to be extended or suspended. Then we get to the physical infrastructure bill, which is almost ready, almost baked. But the fourth thing is there's really a intramural war among Democrats about this human infrastructure piece, which hasn't really even been defined yet, much less been given a budget top line or a maximum spending amount. And Democrats are going to have to fight among themselves for quite a while to figure out exactly how much they want to spend and what's going to be in that. My view is very simple. Work expands to fill the time allotted. The time allotted is the end of the fiscal year when all this other stuff has to happen. And what I think happens is we get funded, we get a debt ceiling, we almost certainly get the physical infrastructure bill. But what ends up happening is the human infrastructure piece, I think, is only about 30% likely in any form right now.
Terry, the idea of this infrastructure plan being market positive, as you say, is interesting to me in light of the fact that it's $550 billion, which is substantially low the numbers being thrown around earlier this year. Why is this a market positive when people had expected so much more earlier?
To me, Lisa, and I think it's a perfectly valid point, to me it's a market positive in sentiment more than anything else. There's an awful lot of talking up about how this is going to help stimulate the economy and move things forward and help fix our infrastructure problem. Frankly, I think there's truth to all of that, but I think it's a great deal overblown in others. There's no urgency about how this money is going to get spent or when. Road projects take years to start, much less to finish. My favorite example of this is a 40-mile stretch near the place where I grew up in Pennsylvania, that's taken 10 years to become permitted, and it's still not finalized. This is going to take a long time, and I think the economic impact is overblown. But that said, market sentiment being what it is, this is a positive.
Terry, you mentioned earlier the fact that we're going to have to deal with the debt ceiling in the fall, in September, October, even though it expires tomorrow. And something else that expires tomorrow is the eviction moratorium. And yet Joe Biden, the president, waited until yesterday to actually say something about it and ask Congress to act. Is there any likelihood that something can be done by tomorrow?
Hi, Kayleigh. Two things. One, the debt limit as long as possible, so that in reality the debt ceiling is going to end up hitting in late September, early October, maybe even November, according to the Congressional Budget Office. The other thing is on the eviction moratorium, what I'm hearing and understand is that the president's last-minute ask certainly didn't help marshal forces behind it, number one. Number two, there's a lot of people in the House that want to do this. Number three, it's going to be very difficult to pass in the Senate. So I tend to think it probably doesn't happen, and I think people ought to prepare for that. They may end up sticking something in the infrastructure bill if it goes very well and ends up getting passed by next week, which is a possibility, although I think it's a little murky right now. But other than that, I don't think I would look for smooth or quick action here on Congress's part.
Terry, good to hear from you, sir, as always. Thank you. Terry Haynes there, Pangea Policy Founder, walking us through some of the issues down in D.C. Politico out with a piece earlier this morning, Lisa. Pelosi and Sanders brace for Democrats